India, with its diverse and vibrant economy, is one of the world's fastest-growing major economies. As a developing nation with a complex socio-economic structure, India's economy is characterized by a mix of agriculture, manufacturing, and services sectors. Over the years, India has transitioned from an agrarian-based economy to a more industrial and service-oriented one, with information technology and financial services becoming key contributors to its GDP. The country's economic landscape is further shaped by its large population, which provides both challenges and opportunities, such as labor supply, consumption demand, and income inequality. India's sheer size, along with its potential to become a global economic power, makes understanding its economy crucial to comprehending its role in the world. The Indian economy is a dynamic mix of traditional industries and cutting-edge sectors, driven by agriculture, manufacturing, and a burgeoning services sector. Agriculture continues to support a significant portion of the population, although its contribution to the GDP has diminished over time. The manufacturing sector, which includes industries such as textiles, automobiles, and electronics, plays a crucial role in providing employment and driving economic growth. However, it is the services sector, particularly banking and telecommunications, that has emerged as the dominant force in India's economic landscape, contributing to nearly 60% of the GDP. This transformation reflects India's shift towards becoming a knowledge-based economy with a strong focus on digital technology and innovation. Historically, India's economy has undergone significant changes, especially post-independence. From a colonial economy heavily dependent on agriculture and the export of raw materials, India adopted a planned economy model in the early decades of its independence, focusing on self-reliance and industrialization. The period from the 1950s to the late 1980s saw the government controlling key sectors and promoting import substitution. However, inefficiencies in the system, high levels of bureaucracy, and a lack of competition hampered growth. This led to a balance of payments crisis in 1991, which became a pivotal moment for India's economic reform. The 1991 economic reforms marked the beginning of India's liberalization process, where economic policies were dramatically restructured to promote foreign investment, trade liberalization, and privatization of state-owned enterprises. These reforms opened up India to the global market, allowing for greater economic integration, rapid industrialization, and the growth of its private sector. The IT boom in the late 1990s further boosted the economy, as India became a global outsourcing hub, supplying software development and services to multinational companies. This era of reforms has been a cornerstone in India's journey to becoming a global economic player. Key milestones in India's economic history include the Green Revolution of the 1960s, which transformed agriculture and made India self-sufficient in food production. Another milestone was the liberalization reforms of 1991, which fundamentally altered the country's economic trajectory. More recently, initiatives such as Make in India, aimed at boosting the manufacturing sector, and Digital India, focusing on digital infrastructure and governance, highlight India's efforts to modernize and compete in the global economy. These milestones not only define India's economic evolution, but also shape its future aspirations towards sustainable and inclusive growth. Agriculture has historically been the backbone of India's economy, playing a critical role in supporting livelihoods and providing food security to the nation. Despite the rapid growth of the industrial and service sectors in recent years, agriculture remains a significant contributor to India's economic framework, especially in rural areas. A large portion of the Indian population still relies on agriculture as its primary source of income, particularly in rural regions where modern industries and services have not fully penetrated. The rural economy, driven by agriculture, forestry, and fisheries, is essential not only for providing employment to millions of Indians, but also for ensuring the country's food supply and maintaining socio-economic stability in vast rural communities. The role of agriculture in India cannot be overstated. It is a sector that provides direct employment to over 50% of the population and contributes approximately 17 to 18% to the national GDP. Agriculture in India is diverse, with crops ranging from rice, wheat, and pulses to cash crops like sugarcane, cotton, and tea. The country is one of the largest producers of several crops, including wheat, rice, and horticultural produce. Furthermore, the agricultural sector is intricately linked to the well-being of rural India, where most of the country's farmers live and work. In addition to providing food security, agriculture also drives the demand for rural non-farm activities, thereby contributing indirectly to rural income and employment. The Green Revolution, introduced in the 1960s, was a transformative period in Indian agriculture. It brought significant advancements in agricultural productivity by introducing high-yielding varieties of seeds, extensive use of chemical fertilizers, and better irrigation practices. The revolution primarily benefited regions like Punjab, Haryana, and western Uttar Pradesh, where the adoption of modern techniques led to a sharp increase in the production of wheat and rice. This period not only ensured that India became self-sufficient in food production, but also prevented potential famines, improving the living standards of many farmers. However, the Green Revolution also had its drawbacks, as it led to regional disparities and environmental challenges like soil degradation and water scarcity due to the overuse of chemical inputs and groundwater exploitation. Despite the success of the Green Revolution, the rural economy in India faces numerous challenges. One of the most pressing issues is the fragmentation of landholdings, which limits the productivity and efficiency of farming. Many farmers in India operate on small, marginal plots of land, making it difficult to adopt modern agricultural technologies or achieve economies of scale. Additionally, access to credit, irrigation, and market infrastructure remains uneven, with many rural areas lacking the necessary resources to thrive. The agricultural sector also faces the impacts of climate change, with erratic monsoons and extreme weather events threatening crop yields and food security. These challenges hinder the overall development of rural India and require comprehensive policy interventions. Rural development in India is further complicated by the socio-economic disparities between urban and rural areas. While cities have benefited from modernization, infrastructure improvements, and economic opportunities, rural regions often lag in terms of access to education, healthcare, and modern amenities. The migration of rural youth to cities in search of better jobs exacerbates the problem, leaving rural communities with a shrinking labor force. Addressing these issues requires a holistic approach that not only focuses on agricultural productivity, but also on improving rural infrastructure, education, and employment opportunities outside of farming. By integrating rural development with broader economic growth strategies, India can ensure that its agricultural sector continues to be a pillar of the economy while also improving the quality of life for its rural population. Industrialization has been a key driver of economic growth and development in India, significantly contributing to the country's transformation from a largely agrarian economy to a more diversified and modern one. The manufacturing sector, in particular, has played a pivotal role in this process, providing employment to millions of people and acting as a catalyst for technological advancement and urbanization. Over the years, India's industrial base has expanded to include a wide range of sectors, from textiles and steel to automobiles and electronics, all of which have contributed to its economic resilience. Industrialization not only bolsters the domestic economy, but also enhances India's global competitiveness by increasing exports and reducing dependence on imports. The rise of the manufacturing sector in India can be traced back to the post-independence era, where the government focused on establishing a strong industrial base through state-led initiatives and investments in key industries. Early industrial policies were aimed at achieving self-sufficiency in production and reducing reliance on foreign goods. Public sector enterprises played a dominant role in industries like steel, heavy machinery, and chemicals. However, it was only after the economic reforms of 1991 that the manufacturing sector began to flourish more dynamically, as liberalization opened up the market to private players, foreign investments, and global competition. This period saw the rapid growth of industries such as automotive, pharmaceuticals, and consumer goods, marking India's entry into global supply chains. India's manufacturing sector is now home to several major industries that contribute significantly to the economy. The textile and garment industry is one of the oldest and largest sectors, employing millions and contributing substantially to export earnings. India is also a major player in the automotive industry, with several multinational and domestic companies manufacturing cars, motorcycles, and commercial vehicles for both the domestic and international markets. Pharmaceuticals and biotechnology have emerged as another key area, with India becoming known as the pharmacy of the world due to its large-scale production of generic drugs and vaccines. Additionally, sectors like steel, electronics, and chemicals have also seen substantial growth, making manufacturing a vital component of India's economic landscape. In recent years, the Indian government has launched several initiatives aimed at boosting the manufacturing sector and making India a global manufacturing hub. One of the most prominent initiatives is the Make in India campaign, which was introduced in 2014 to encourage domestic and foreign companies to manufacture in India. The campaign focuses on sectors such as automobiles, electronics, textiles, and defense manufacturing, with the aim of increasing the share of manufacturing in the GDP and creating jobs. Other initiatives like Skill India aim to equip the workforce with the necessary skills to meet the demands of a modern industrial economy, while Digital India seeks to integrate technology into manufacturing processes to improve efficiency and innovation. Despite the positive strides made in industrialization, India still faces several challenges in realizing its full manufacturing potential. One of the major issues is the lack of adequate infrastructure, particularly in logistics and transportation, which increases the cost of production and hampers the smooth flow of goods. Additionally, the manufacturing sector has been criticized for its relatively low productivity and slow adoption of advanced technologies compared to other global players. Labor laws, regulatory hurdles, and land acquisition issues also pose significant barriers to the expansion of the sector. To address these challenges, the government has been working on reforms aimed at simplifying regulations, improving ease of doing business, and fostering innovation, with the ultimate goal of transforming India into a global manufacturing powerhouse. The services sector has emerged as the most dynamic and significant contributor to India's economic growth, playing a pivotal role in transforming the country into one of the fastest-growing major economies. Over the past few decades, the services sector has grown rapidly, outpacing agriculture and manufacturing in terms of GDP contribution and employment generation. Today, it contributes nearly 60% of India's GDP and employs a large portion of the workforce, making it the backbone of the Indian economy. The sector is incredibly diverse, encompassing a wide range of industries, from information technology and telecommunications to tourism, hospitality, financial services, healthcare, and education. Its rapid expansion has positioned India as a key player in the global services market. Information technology, IT, and IT-enabled services, ITES, are perhaps the most prominent subsectors within India's services industry. Since the 1990s, India has become a global hub for software development, outsourcing, and its services, earning its place as the world's back office. Indian IT firms such as Tata Consultancy Services, TCS, Infosys, and Wipro have built a strong global presence by providing cost-effective and high-quality services to clients around the world. This sector has also fueled job creation, particularly in cities like Bengaluru, Hyderabad, and Pune, where IT parks and innovation hubs have become vital to economic development. The IT and ITES industries have played a key role in positioning India as a technology-driven economy, contributing significantly to exports and foreign exchange earnings. Tourism and hospitality have also become crucial components of India's services sector. Known for its rich cultural heritage, diverse landscapes, and historical landmarks, India has attracted millions of international and domestic tourists over the years. The tourism industry not only contributes to foreign exchange earnings, but also creates a ripple effect across several other sectors, such as transportation, retail, and handicrafts. In recent years, niche tourism segments like medical tourism, ecotourism, and spiritual tourism have gained popularity, drawing visitors from all over the world. The hospitality industry, which includes hotels, resorts, and travel services, has seen substantial growth as a result, with both international hotel chains and local players investing heavily in infrastructure and customer experience. The sector plays an important role in job creation, particularly in rural and semi-urban areas where tourism is often a major source of income. The financial services and banking sector is another key pillar of India's services economy, providing essential services that support both individual consumers and businesses. The sector includes commercial banks, insurance companies, stock markets, asset management firms, and non-banking financial institutions. Indian banks, both public and private, have undergone significant modernization in recent years, embracing digital transformation to provide more accessible and efficient services to customers. The rise of fintech companies has revolutionized the sector, offering innovative payment solutions, digital lending platforms, and investment options that cater to the needs of an increasingly tech-savvy population. Furthermore, the financial sector plays a crucial role in supporting economic growth by facilitating capital formation, enabling businesses to access credit, and fostering financial inclusion for millions of unbanked and underbanked citizens across India. While the services sector has driven much of India's economic growth, it also faces several challenges that need to be addressed to ensure its continued expansion. One of the primary challenges is the uneven distribution of growth within the sector. While it and financial services have flourished, other segments like healthcare, education, and tourism often struggle with underinvestment, regulatory bottlenecks, and infrastructure constraints. Additionally, the services sector is highly concentrated in urban areas, leaving rural regions with fewer opportunities to benefit from this growth. Another concern is the vulnerability of certain subsectors, such as tourism and hospitality, to external shocks like the COVID-19 pandemic, which severely impacted travel and related services. To sustain the momentum, India must focus on improving infrastructure, ensuring regulatory reforms, and fostering innovation across all service industries. Foreign trade and investment have been pivotal in shaping India's economic growth, transforming the nation from an inward-looking economy to an integral part of the global economic landscape. Over the decades, India's approach to trade and foreign investment has evolved significantly, adapting to changing global dynamics and domestic needs. The country's increasing integration into global trade networks has bolstered its exports, enhanced foreign reserves, and attracted substantial foreign investments. Today, India's foreign trade encompasses a wide array of goods and services, while foreign investment plays a key role in driving industrial growth, creating jobs, and fostering technological advancements. These elements have not only strengthened the Indian economy, but also positioned it as a major player in international trade and investment. India's trade policies have undergone a significant transformation since the country's independence in 1947. Initially, India adopted a protectionist stance, focusing on self-reliance and import substitution to safeguard domestic industries. High tariffs, import quotas, and extensive regulations define this era, limiting India's participation in global trade. However, the economic crisis of 1991 proved to be a turning point, as India was forced to liberalize its trade policies and open up to the global market. The government introduced sweeping reforms, reducing tariffs, eliminating quotas, and easing restrictions on imports and exports. This liberalization paved the way for India's integration into the global economy, leading to a surge in trade volumes and the diversification of its export basket, which now includes goods like textiles, pharmaceuticals, its services, and automobiles. Foreign direct investment, FDI, has played a crucial role in India's economic modernization, serving as a major source of capital, technology, and expertise. FDI inflows were minimal before the 1991 reforms due to restrictive policies, but the liberalization measures opened the doors to foreign investors, leading to a sharp increase in investment across various sectors. Key industries like telecommunications, automotive, and pharmaceuticals have benefited immensely from FDI, with multinational companies setting up manufacturing plants, R&D centers, and service hubs in India. The government has also actively sought to attract FDI by easing regulations, improving the ease of doing business, and offering incentives in key sectors like infrastructure, defense, and renewable energy. As a result, India has become one of the top destinations for FDI globally, helping to boost economic growth, create jobs, and foster innovation. India's global trade relations have expanded significantly in recent years, with the country forming strategic partnerships and trade agreements with several major economies. India is a member of key international organizations, such as the World Trade Organization, WTO, the G20, and BRICS, which enhance its role in global economic governance. The country has signed numerous bilateral and multilateral trade agreements to promote exports, reduce trade barriers, and attract investment. For instance, the India-ASEAN Free Trade Agreement and agreements with countries like Japan, South Korea, and the European Union have been instrumental in boosting trade flows. Moreover, India's participation in global value chains, particularly in sectors like information technology, pharmaceuticals, and textiles, has strengthened its trade relationships with developed economies such as the United States and the European Union. These partnerships are crucial in expanding market access and increasing India's influence in global trade. While India has made significant strides in foreign trade and investment, there are still challenges that need to be addressed to enhance its global competitiveness. One major issue is the persistent trade deficit, with imports often outpacing exports, particularly in areas like oil, electronics, and machinery. Additionally, India's manufacturing sector faces challenges related to infrastructure, regulatory hurdles, and the need for technological upgrades, which hinder its ability to compete globally in certain industries. Furthermore, while FDI has increased, there is room for improvement in areas like intellectual property rights protection and labor law reforms, which could make India a more attractive destination for investors. Addressing these challenges will be crucial as India seeks to further integrate into the global economy and maintain its momentum in foreign trade and investment.